Yo, what's up everyone? It's your boy Looney. Today I'm reacting to what the market's been doing right now, and I'm going to walk you through the trades I just opened. No panic, no over trading, just simply reading the charts and playing the setups. Now these are going to be a little bit more advanced trades, but as a beginner or with low capital, you can do these trades. Right now volatility is quiet for now, but we all know that could just change real quick with the Trump administration and just overall news. So before we get into it though, quick shout out to the Discord. It is free to join. And then I also have premium perks. It's $8 a month. You can get one-on-one coaching. There's a course. I do giveaways. You can check it out. All links will be in the description. But we were just talking about volatility, so we might as well talk about VIX, which tracks volatility. And right now it's at 17 or close to 18, and that is pretty neutral. Anything lower than 15 is an indication that things are a little overvalued, and anything above that 20 is when things get a little volatile, and it's a good time to sell puts or some kind of trade like that. So we're not really seeing much with volatility. But that doesn't mean I'm just chilling, I'm not making trades. In fact, I'm using this time to set up defined risk trades like credit spreads. It's not about predicting the next big move. It's about positioning for what the market is giving us right now. So let's go over the call credit spreads. So quickly, a call credit spread is a hedge to the downside. It's a bearish but neutral strategy. It's small position, or at least in this play, you simply do it by selling a out of the money call and then buying a further out of the money call, same expiration. So that's what I got going on. This Riot, $11 and then $12 spread. I have two going on for Riot, and then I think I have another one for Riot. Let me pull up, I'll do it by position. So on Riot, I have a bunch of puts, a bunch of calls, but I have a bunch of credit spreads or call credit spreads. I have two at the $11 and one at the $12. Basically saying that if it stays below $11, I'll get paid $12. And then on this other trade, if it stays below $12, I get paid $88. So I'll get $20 in total if it stays within this range under the $11 or $12, which seems to be pretty likely. And I'll get into why I feel it will be likely in a second. And then let me pull up Mara, because same situation I got going on with Mara. I have just one credit spread, one at the 18. Pretty unlikely, once again, that Mara rises to 18. It is possible, but it is a small position. So it's only like 1% of my portfolio, if that. And then SoFi, I have one credit spread at 16, and if SoFi goes to 16, that's fine. I have a buy call. Now, why did I choose this? Why did I decide to do this? And the reason is because all three of these are trading near the top of their Bollinger Bands. So if we go to this 1 month chart, when I expanded the stock, the Bollinger Bands are a good indication of where the stock is going to head next. And it tells you whether the stock is overbought. And I'm basically trying to take advantage of this, taking profit if they stall or drop. So that's why I'm selling out of the money calls and did those spreads. Define risk, define reward, low stress. And just going back to my trades, I'm going to go back to this Bollinger Band in a second, but this only requires about $100. So it's a very small position, and you're only making like $8 to $10, but it is such a small position that it's worth it for me, even if I lose it. So back to this Bollinger Bands, we go to this 1 month chart. It shows, well, the Bollinger Bands in general are really good. It shows you that when the stock doesn't usually go out of these Bollinger Bands. The Bollinger Bands are those blue cloudy lines, and if you notice, every time it comes out of those lines, it tends to go back in. And that's because it's based on a standard deviation, and 5% of the time they do deviate from the standard deviation. And that's what I took advantage of. So I have a alert set on this stock that if the price rises above my Bollinger Band and below, I get notified. Same with the RSI. So I got notified on those both because they're pretty linear. They work together. When they go past the Bollinger Upper Band, usually RSI follows, and it's the same momentum. So perfect time to sell credit spreads, call credit spreads, because if you look here, according to the Bollinger Bands, within a 1 month basis, it is unlikely to go past that $10 mark. So me being even safer, I set up credit spreads for $11 and $12. Same situation with Mara and Riot. Let me pull up Mara and let's just try and find that one. So $18. And if we go to Mara, we expand it, go to the 1 month chart. I did it the other day, so it's not past the Bollinger Band, but it was when I set it up. So on a 1 month basis, $16. So that $18, a lot safer. And then lastly is SoFi. So we go to, we go to SoFi. We expand this. And this one's trading towards the middle, and it actually did drop a little bit. So I actually timed this pretty well. I did it at 16. So the upper Bollinger Band is 13.75. So it's pretty unlikely for it to go to 16. If it does, that's fine. And all these stocks, it's fine if it goes up to that price. And that's because I own the shares. I own SoFi, I own Mara, and I own Riot. So just because my credit spreads don't do well, my call credit spreads, it doesn't mean I'm not going to be profitable. You can see here I have a long-term buy call on Riot, and this will do numbers if Riot goes past that $11. Right now it's already up 33%. So obviously I'm more bullish on these stocks, but I am just protecting myself for any kind of stall or the downside. Now, similarly, I actually set up a put credit spread. And this one's a little bit more risky. I don't know if I'd recommend this trade. I might have got a little too carried away. As I mentioned in the beginning, I didn't, but this one I might have. But HIMSS is a very volatile stock, and year to date, it's up 100%. Its low was 27, and now it is at 50. We actually saw this week that it shot up in one day and then shot back down in like an hour span. But I am seeing good support at that $50 mark. So to be safe, I set up a 47-46 put credit spread. Same idea. You're selling a put out of the money and then buying a put further out of the money. Same expiration. And this one was because it was trading towards the lower end of the Bollinger Band. So we go to this 1 month chart, and I believe I opened it earlier today, and right there it passed. It went through or nearly touched it. So you can see here the lower end is 53 on a 1 month chart. So it is pretty unlikely for it to go 48. That doesn't mean it won't go. This stock is very volatile. We've seen it go all the way down from 60 to 27. So pretty risky trade. We're going to see how this goes. I'm going to see how I manage it. Probably close this out early just to be safe. But I'm doing it because it's close to the lower Bollinger Band. And I'm also not using a lot of capital for this trade either. Again, it is only $100. You know it's $100 because of that spread. 47 minus 46 is $1, and then times it by 100 is 100. So I'm just playing technical levels, reading momentum, and just collecting premium without going all in. So what's my game plan if these go wrong? So if volatility spikes, like geopolitical tension or macro news, that's when I'm going to go heavier. I'm going to cash out my puts because my puts are in a really good position right now that it's pretty unlikely for them to get assigned. And if they do, again, not terrible, but I might start buying calls or selling puts more aggressively. I'll probably aim towards selling puts more aggressive than buying calls right now, but I'm just staying calm. Credit spreads are letting me play both sides without tying up my whole portfolio. There's no panic buying. There's no chasing pumps, just structured trades with a plan. Let me know what you're reacting to this market. Drop a comment, hit like, and join the Discord if you want real-time updates or want to learn how to do this yourself. Peace.